Hello and welcome to a trading session with me, Tendai Pilatwe. And today we are going to learn about the Holy Grail strategy. So before we do that, we've got to go through the individual trade sheets. It's always good to have a habit of writing down and documenting each and every trade that you do, so that you are able to see where you went wrong or to see where you went correct, and therefore you would be able to replicate that correct trade or not to make your mistakes again. So here's an example of a trade sheet. I'm going to download it, and I'm going to so basically show you an example of a trade sheet. So this is a template that I have right now. And so I'm going to download the template, and then I'll show you how to fill out a trade sheet. Can you see my screen?
Yeah.
Okay. All right. So first of all, before we get into any trade, okay, so currently I cannot write anything as it's still in the read-only format. So we save the template as, yes, now I'm able to write. So for example, so what I do with this trade sheet, before I do any trade, I write my name on the trade sheet, and then I look at the chart period. So if I'm going to be trading, maybe so there's different chart periods. There's the London session. I'm sure you know the New York session. So from first thing in the morning up until about 2 o'clock, it's London. And then from about 1 o'clock, New York kicks in. I'm sure you're aware of that. The chart, those different periods. Then from about midnight is the Asian session, where the Asians are now getting in. So so the first thing that we trade before we set a trade, we would just obviously write down what period are we trading, correct?
Yeah.
So right now at 8 p.m., I would say probably New York is closing down. So I would say, yeah, so yeah, so I'll say New York session. If you are not too sure about which chart period you are in, it's a Google click away. So you can just be sure what sort of time and what sort of chart. So expected trade duration. So if I am using, depending on the strategy that I'm using, if I'm using the backbone, I obviously expect to be in the trade for possibly a day or 2 days, right?
Yes.
I think that's usually what is realistic with the backbone. But if we are in other strategies like the Holy Grail, they are more quicker. So sometimes you find that you're in there for a few hours. So you'd set, so let me actually open a trade so that we fill out the trading form. So I'll give you a copy of these forms. I think it will be best practice to probably print them out, right? Print them out, put them into some kind of a folder so that every morning you check your charts. If you're going to get into the trade, you document. You've gone into London, but it's always good practice to use the computer. Why? Because you need a screenshot. And I'll show you why in a minute. So currently, it's 8 p.m. on a Wednesday evening, 19th of June. There isn't been really any alerts since 5 p.m. Just browsing through the charts right now, just looking at the charts and just trying to see if there's any trades. Can you see something in common that a lot of prices are crossing? each other. So a cross has just happened here, which is a different change of direction. Another cross is about to happen in the Euro USD. Can you see that?
Yes.
It's about to cross. German 40 is way well on its way down. So on Monday, that's when it was overbought and it started heading down slowly but surely. Slowly but surely it's heading down. So Monday, this is this point here where my vertical line is. Again, UK 100 is about to cross. So that cross is about to take place. NASDAQ, US 100, NASDAQ, what's happening? Wow, it's on a steady way up, right?
Yes.
So again, since Friday, that's when it made its lowest lows. And that's right around about here, and it's been on its way up since. So so this is the example of the trade sheet. Can you see the trade sheet?
Yes. Yes.
All right. So whenever you do a trade, it's very important that you write up setup. What is the setup that's getting you into the trade? Fundamental, it's always about the news, and we know the news that we always check. So some people believe that it's a good practice to look at the news all the time. So you'd write that if you found the news on FX Street, you put FX Street here. If you found it on Forex Factory, I know you guys like to trade using the fundamental aspect.
Yeah.
You like using a fundamental only, but it's also good practice to use technical, and this is where you have to use your strategy. So the technical setup would be, for example, the backbone strategy. This is just an example. This is the technical bits where our price is overbought or oversold. It's in a bullish direction. The direction is matching on the hourly, on the daily. So this is the technical aspect of it. So you would write down here what is making you to get in there technically. So trigger, again, depending on your strategy, I think what we've learned so far only is the backbone. So we know what the triggers are for a backbone, right?
Yes. Yes.
So can you name them out?
The hourly and daily the trends have to be matching.
Yeah. Trends
The
matching.
RSI have to be overbought or oversold.
Yep. Yes.
You need 50 and 200 EMA for the moving averages.
Yes. And what needs to happen to them?
They need to cross.
Price needs to retrace back to them, right?
Yeah.
So we need a retracement. So like, for example, if we're heading up, price needs to retrace back down first, right? So that's a retracement. Okay, what else? Previous support resistant line.
Yes, support resistance line. Yes. The support and resistance line should always be either at the last highest high or the last lower low.
Yeah. So so those are our confluences that we've put down as triggers, and then the execution. So whilst if everything is all in line to execute, we always wait for that confirmation candle, right?
Yes.
We always make, before we pull the trigger, we wait for the confirmation candle. Then we mark our target and stop loss, right?
Yeah.
Target and stop loss. That's how we execute. Bang, pull the trigger. Boom, we're in. So reason for stop loss placement. It's very important to write the reason. So for example, let me see if there is a previous trade. So you have to write exactly what the situation of your trade looks like. So I'm going to go a bit back in history. Let me see if I can use the Euro USD. Yeah, I would like to use the Euro USD because I like this chart. Why? Because I remember telling Auntie Ivy to sell on this very day, Wednesday, 6 o'clock. You
Yeah.
see right here where my mouse is?
Yes.
That's Wednesday, 6 o'clock. So it's always good to take instructions, you know. So this is this Wednesday here, sell Euro USD. Can you see the time on my WhatsApp? Can you see my WhatsApp?
Yes. Yes.
I say to her, sell Euro USD at 7 o'clock. And look
Yes.
what she said to me. Why sell?
Yes.
Meaning she was a doubting Thomas.
Yeah.
I done my confluence and yeah, she couldn't believe it. So there we go. She missed out on money. So the reason, so this is right here when I told her to sell. And then the next couple of days, in fact, the whole week, price has been going down. This is last week, Wednesday. So for the whole, for up to Friday, price was just heading down right here. So if we use this as an example for filling out our charts, then we would put this as triggers and confluences. So the reason for our stop loss would have been that, you know, like this is where price was, right?
Yes.
So we target right here, agreed?
Yes.
Yes, I would put my target here to be conservative, to be fair. I
Yeah.
know it's not a very huge target, but I would be considering that here there was a strong support line. Can you see it here?
Yes.
Can you see here that price kind of just respected this line and then this week respected it? And then even these
Yeah.
2 little wicks right here kind of set. So it's a touch, break. Can you see that?
Yeah. Yeah.
So I
Touch,
would
touch.
kind of
Yeah.
I would put my target here. So I wouldn't have known that it's going to end here, but this is where I would target to come out here.
Yes.
That's how I would have done the trade. My target would have been somewhere here. This is where my target would have been. So I calculate the pips from this point up to this point. I calculate how many pips is it, and then I divide them by 2. When I divide these pips by 2, that answer would have been my stop loss. So it's always 2-to-1 ratio, right? My stop loss is 1, my target is 2. So it's called a 2-to-1 ratio. So this distance up to here, up to my target, my stop loss, I think half of that is about here. Can you see that?
Yeah.
So this is where, so this is the reason that you would give in your file, in your trade sheet, reason for stop loss, 2-to-1 risk to reward ratio. And then reason for target, like you saw on that particular trade, I would say the reason for my target would be this previous support and resistance line that I showed you.
Is this for the Holy Grail or the backbone?
No, so this is the backbone, but I'm just showing you how to fill out a trade sheet.
Okay.
Yeah, so it's very important to fill out these trade sheets. I know I don't, but I need to start doing that because it really gives you a diary. It's like a journal.
Oh.
Yes, so that you can look back at your trades. You can now look at your mistakes. You can correct them. So the reason for target is previous support and resistant line. All right. Okay. Then trade exit. This is probably after the trade has happened. Maybe I get stopped out. If you exit a trade in separate steps, please break the overall trade down into similar. So how long did it take? it's very important to write all this information. It might seem like it's a lot of work, but from here where we started, it was 5 o'clock. To get to our target, it was the following day at 6 o'clock. So exactly 24 hours.
Yes.
So it took exactly 24 hours for our target to be reached. So actual duration, 24 hours. Date, so we said this happened Wednesday. What was the date last week? So I'm supposed to do this. So you see, if I had actually journaled this trade, I would be just reading it out to you.
Yeah.
So 12th of the 6th, 24 is the date. Time, it was around 1700, like we said, PM. BNS, what do you think that stands for?
I'm not sure.
So asset is which pair? Asset is the pair that we are trading, which is the Euro USD.
Yeah.
So we put that. So Euro USD, that's the pair. Lot size, very good journaling. So what lot size did we use here? When we got on our trade, remember we are assuming we actually went in the trade, and you know, but we didn't. But from now on, now you know that you always write your lot size here, right? So
Yes.
for the sake of journaling, I'm going to put 0.01. Entry price. Oh, this is very important, guys. So if I put my line here, I'm gonna make a note of this price in black, which is 1.08443. That's when I entered agree.
Agree, yes. Okay, yeah.
1.08443. That was the entry price. Exit price. Let me have a look. So if I put my line where I would have exited, it's 1.07677. I write that 1.07677. So pips. The amount of pips is just subtracting this number by this number. This shows us how much pips we won. So I'm just checking on my calculator now. 1.07677 take away 1.08443. Okay, let me try again. So 1.08443 take away 1.07677. Okay. So it's giving me 766, 0.00766. So what that means is 76 pips, about 76 pips. That's how much I made. Because remember, we kind of, we ignore, so it's 766 and we divide it by 10, right? So 76.
Yeah.
Then in money, maybe we say 0.01 lot size. So in money, we can say maybe £7.60 that we have made, right?
Yes.
Do you agree? £7.60 each pip. If we made £7.60, it means each pip is how much?
How much pips were there?
76 pips. We moved 76 pips. So from here to here, so from here to here, it's about 76 pips. And we made £7.50. So how much was one pip? So all you need to do is say £7.50, £7.60, sorry, divided by this is a very, very simple math divided by 76. So each lot size was 1p.
Oh, okay, yeah.
So that's how we worked it out. So of course, you know that we're able to increase these lot sizes as we go ahead. So that's all. That's the example that we have right there of filling out our trade sheets. So I just want to get everything neat. So this is the actual trade. So I take a screenshot. Can you see my screen?
Yep. Is it
Yes, I've just cropped a screenshot. So that's why it's very important to use a computer so that I'm gonna close this. So here it says insert a chart. Can you see here where it's asking us to? So it asks us to insert a chart first of all. If you can cut part of your position or move your stop loss. So it's asking us to insert a chart here. And if we have our chart stored up, it's very, very simple for us to insert our chart. And that's our chart right here. Can you see our chart?
Yes.
Yes. So whenever you do a trade, always put the chart there. It's very simple. You copy paste, you put the chart. Before the trade, you put the chart when you come out of the trade. So we're keeping a diary.
Yeah.
We're sort of keeping a diary so that we can mark our mistakes. So here, when we actually exit the chart, when we stop the trade, again, we insert another chart as well on there,
Yep.
which is great. And that's all. That's all you need to do. So this is an example of how to create a trade sheet. So that's all done. Understood?
Okay. Yeah.
Yes.
All right, okay. So now moving on to today's lesson. So today we are going to go through, I think let's go through the scalping strategy. This is a completely different strategy. Yeah,
Miss,
sorry.
are we still doing the Holy Grail or are we changing it?
It's up to you. Do you want to do the Holy Grail or do you want to do the scalping?
Scalping, please.
I pulled out the scalping strategy information because I think it's a bit easier to learn. It's a bit like the backbone. Shall we go through it quickly?
Yes.
All right. Okay. So in terms of the scalping strategy, what we need to look out for is unlike the other strategy, like the backbone that we have learned, with the scalping strategy, we have to use the 15-minute chart, the 5-minute chart, and we need to mark support and resistance level. So I'm on the 1 hour. So with the scalping, we always move to smaller time frames. We move to 15 minutes. So this is a 15-minute chart right here. And we can also check the 5-minute chart. So those are the type of charts that we work with, 15 minutes, 5 minutes. And so what we do is that the EMAs that we use are 8 and 21 on the daily time frame, 50 and 200 on the 15-minute time frame. So currently we are using the 50 and 200. Agreed?
Yeah.
All right. So again, the first thing we do, we look for confirmation via direction. So we are in the 15 minutes right now. So we still look for confirmation via direction. Are we in an uptrend here?
Yes.
Yes, we
we
are.
are.
So we also check daily as well if we're in an uptrend with daily.
So it's 15 minutes and daily we do.
Yes, 15 minutes and
So
daily.
50 and 200 are going to be in 15 minutes.
Yes, that's right. And so we check the daily time frame confirmation. And can you see that this is in a downtrend
Yeah.
and the 15-minute is in a it's in a uptrend. So we leave this, yeah. So we have got no trade there to trade. So to kind of save time, I like to use external charts. I think I showed you this one before. What was the website that showed us whether 15-minute is in a buy or sell?
MATLAB, I think it was called.
MATLAB, no, MATLAB shows this is MATLAB is more of the pair,
It's
most volatile pair. But it was
It's Forex Factory, I think.
no, it wasn't Forex Factory, it's economics. Something to do with economics. Let me check. Okay, so this is economics.
I told you. I told you to slow down.
Is it trading economics? I'm not sure the website anymore. If it's a trading, yes, I think it is. And then we check their markets. No, this is not, it's not trading economics. Okay, I'll find out about the website. It's not this one. Anyway, so what we need to do, so for this strategy to work, we also use something called pivot points. So I'm just going to pull out some pivot points so that you see how they work. So pivot point standard. Okay, I put them on my chart. So can you see that now it has lines, these orange lines?
Yeah.
All right, that's great. So we're in the 15-minute chart and now we have pivot points. So the idea is that usually pivot points, something usually happens between the pivot, from pivot point to pivot point. So there's S1, S2, S3 going down, there's S4, and then in the middle, this would be the pivot. Can you see here it says pivot? And then it starts R1, R2, R3, R4. So usually you find that when price is around the pivot line, it will probably go up to R1 or it will probably go down to S1. So these are like points where price changes direction.
Yes.
Yeah. So what we do now in 15 minutes chart, we draw trend lines to confirm the direction of our major trend. And we've seen that we find a chart that has the correct directions. Then from there, we identify our support and resistance levels on the 15-minute and the 5-minute chart. So for a good trade, I think we need to find, so this is just crossed over. Let's check this. Okay, this is hourly. Okay, so this is in an uptrend. Daily is in an downtrend. Wow. So German 40 is in a downtrend. Yes, it's in a downtrend in 15 minutes. In daily, it's in a downtrend. Okay, so let's work with German 40. So 15 minutes, it's in a 15 minutes, it's in a, okay. Sorry, I'm just going to hide the pivot points because sometimes they get me a bit distracted.
Yeah.
So right now, German 40 is in a downtrend in the 15 minutes, and then in the daily, it's also in a downtrend. So we have the same direction. Now we need to find support and resistance lines. So we need to, those are our key levels, and we need to watch out for. So the idea is that price retraces above or below the EMA, 50 EMA, and bearish or bullish confirmation greater than 50. All right. So now we look for our support and resistant lines. So again, we use those touches. We need to have a very bold horizontal line to find our support line and resistant line. In 15 minutes, it's very easy to find it because it will be very clear. Touch, touch, bounce, touch, bounce. So I would say this is a pretty touch, touch, break, break. So the problem with using this support, this line that I have used, it's so much in the past, right? We need to work around this area, okay? Where our price is here right now, right?
Yeah.
So where I've marked there, this is too far from our action. I need to go down and deal with where price is near. Do you get me?
For the 15, yeah, I get for the scalping method, do you also use the RSI?
For the what?
Do you use the RSI? Let's say overbought,
Okay,
oversold.
no. So for this strategy, for the scalping, so we are learning scalping at the moment. Iman, can you get me my book for my trading? I think it's on the library bookshelf. So for the scalping strategy, there isn't any RSI we use, because the idea of scalping is to quickly get into the market and quickly come out. So
Yeah.
what is our triggers? Our triggers are same direction, daily and 15-minute, price retraced back to the moving averages. So price needs to retrace, and then has it hit a trend line or support line? So price needs to have hit a trend line or support line. Sorry, can you give me a minute? I've got a call. Hello, hi, Has. Yeah, good. Yeah, fine, thank you. Yeah, I was wondering if you can give me your costs.
Okay, so you will buy the locks or?
So I'm saying I'll charge £100 fixing the door and the lock as well. Yeah, so I can get the locks